G'day, guys. Welcome to Beat the Reset. Here we are for our first podcast, 2025, gentlemen. And of course, I've got the Samurai of Silver with me here today, Sammy from Liberty Bullion, and the Baron of Bitcoin from Stormrake. How are you, gentlemen?
Fantastic as always, Tim. Yourself?
Always good, guys. Always
Electric
good, should say, boys. Very good.
Yes, very
we
good.
have a small.
My wrist is very heavy.
Can you hold the wrist out there?
Oh, yeah, we got the wrist going.
We've got.
So, guys, on three, crypto.
What was my bit? Oh, sorry. Go.
Crypto.
Research.
Oh, yeah.
Oh, sorry, I feel
What do I do again? What do I do? Monetary research.
Sorry, guys. I really let the sign down. All right, boys. So this is our first podcast back for 2025.
Yes, sir.
We've got about 26 of these at least we're going to be doing.
Yes.
We said one every fortnight. Is that correct?
Yep, absolutely.
So here we are at the beautiful Brunetti on the ground floor of 257 Collins Street. Sammy, of course, is on level 3. Bisher's over on Queen's Road. Bisher's made the special trip over.
Yes, the arduous journey down St Kilda Road.
An arduous journey. Jill, just have a quick cheers, gentlemen, just before we get started. This is to everybody on
2025 and to BTR.
2025. We're at 100 and something BTC.
102.
Okay, so where do you want to start, boys? Who wants to start?
The Bullion King shall start us.
Over to you.
All right, so we've had a strong start to the year in bullion land, particularly a nice rebound from silver there. Silver is moving up over 1% overnight. It's been a great move so far. Strong year ahead. Now, I think that 2025 is the year that silver is going to massively outperform gold. So last year, 40% up for gold and Aussie dollars. You cannot complain too loudly about that sort of performance from the world's safest asset. So 40% performance from that level of safety, can't say anything bad about that. This year, I think silver blows gold out of the water. So I'm expecting $40 per ounce for silver within the next 3 to 6 months. We're at 30 US at the moment. So that's a 33% gain from where we are now. And I'm expecting us to hit 50 US within the next 12 to 18 months. So that's almost a doubling from where we are now. Out of, again, one of the world's safest assets. So extremely big year ahead for bullion. We've already had a great start to it already. What a time to be alive, dare I say it.
Incredible time to be alive, Sammy. Bisher, good time to be alive. Where were we at? Where's the market at today?
Yeah, well, Bitcoin had a bit of a slumber fest over the Christmas break, got some much needed rest after moving from 66K to 108K in less than 7 weeks. It was an absolutely monstrous run. We had a technical pullback where we went from 108 down to 92. 91 was around where the low got posted. Altcoins got a little bit more beaten up after that. But it was a much needed and very healthy pullback. It allowed us to reload and go. And now we're trading at 102 US. We're back above 160 Aussie. So very promising signs because you can't expect the market to go up and up and up indefinitely. You want to have these healthy pullbacks and corrections along the way. It means that we're still very early in the bull run, right? If we are having these massive blow off tops where month on month it's going up 20, 30, 40, 50% with no corrections, we're probably nearing towards the end of the bull run. So very promising signs. Ethereum still hasn't hit all-time high. One of the layer ones that I've been very bullish on, Phantom, is down 4 or 5% today, which is presenting an excellent opportunity to buy the dip whilst we're still finding some undervalued gems in this bull run. It's trading at around 80 cents. It could easily be trading at $4 to $5 within the next 6 to 12 months.
100%. Sammy, we in a few weeks, Orange Man takes the chair. Good for gold, bad for gold. We've spoken about this before. Are you going to, do you expect any movement at all?
Look, I think overall it's going to be good for gold. I mean, the last time that Trump was in, gold went up 65% during his presidency. So I think Trump will be very good for gold. Short-term predictions a little bit murkier. I don't know whether him getting inaugurated will mean gold goes up or down for the day. But over the rest of his presidency from here, very bullish for gold. If he brings these tariffs in, that's going to be great for gold. If he keeps interest rates low, great for gold. If he spends more than he takes in and he passes his tax cuts, great for gold. So, yeah.
Great for gold all around, really.
Great for gold all around, mate. He's going to be.
Sounds like it's the sort of asset you need to be holding.
Oh, well, I don't know why people wouldn't want it. I mean, up 40% in 1 year. What is that not good enough
I
for
can get 4.5% in a bank with my $1. Don't try that. I know what you're up to, Sammy. It's going to crash. Bish, Orange Man, good for BTC, bad for BTC.
Oh, great for BTC. I mean, the formation of the strategic Bitcoin reserve is moving the Overton window when it comes to how Bitcoin is perceived. I mean, it went from in 2017, 2018 as a tool or a speculative tool for retail investors. 2020, 2021, it was more of a risk-on asset for Wall Street and institutional investors. Now 2024, now heading into 2025, we're seeing that nation states are starting to see Bitcoin as a neutral monetary asset, which is crazy to think about. If you told me that 8 years ago, I probably wouldn't have believed you, even though I started investing in the asset class. So yeah, Bitcoin, where it's going, it'll probably hit anywhere between 200 to 250,000 this year. I'm hoping to deliver at least 100% return in Bitcoin to BTR investors and the rest of the community, but it's not just on me. The SBR is going to be doing most of the heavy lifting. In fact, there is a meme coin called Strategic Bitcoin Reserve that I think is looking quite interesting at the moment, because if they do pass it, it's just, that's how these memes work. The markets rally on the basis of mimetic value. But anyways, I think Bitcoin's going to do quite well with Donald Trump in power.
Absolutely. Sammy, the Federal Reserve is getting ready to drop their interest rates again.
Yep.
They're telling us they're not going to.
Oh, okay.
Another same question as before. Jerome Powell, is this good for gold or bad for gold?
This is amazing for gold, everybody. The fact that they're cutting interest rates across the world, not just in the US at the Federal Reserve, which Tim's absolutely right, they're going to cut. In Europe, they've cut rates. And in China, they've been cutting rates like mad lately. China, now just keep in mind here, this is the world's second largest economy. China is worried about Trump's tariffs. So they're getting ahead of the curve by printing lots of money and dropping interest rates to kind of buffer themselves from the effects of these tariffs. So I don't know if anybody's been paying attention to this channel for a while. When they print lots of money out of thin air and drop interest rates, that is extremely good for the precious metals and for crypto as well. So when you see that the world's second largest economy is cutting rates like mad, Jerome's out here about to cut rates again, and the Europeans have been cutting rates. I mean, what else could you want? You've got the perfect storm brewing for an amazing year for inflation hedge assets.
Bishy, I was going to ask about the size of the capital market size of the crypto space.
Yes.
Do you see that increasing much over the next sort of 5 to 10 years?
Oh, absolutely. I mean, we're still incredibly tiny now. Like all of cryptocurrency markets. I'm talking Bitcoin, Ethereum, Solana, XRP, you name it, it's in there. The total cryptocurrency market cap is still smaller than Nvidia, one tech giant. Just a sense of scale here, guys.
So the question I've got though,
tiny.
but the question I've got is, if it's going to grow, where is the capital coming from?
Look, it's either coming from real estate, traditional asset classes such as equities. That's where most of the obviously FX currency reserves, like a lot of people store value for some reason in Chinese yuan, Russian rubles, US dollars, euros, GBP. They're translating those reserves into Bitcoin. So yeah, it'll be mainly coming from traditional asset classes such as bonds, which is absolute garbage, equities, real estate, and foreign exchange reserves.
Yeah, bonds. Geez, I heard in a superannuation fund they're pretty damn successful. What are you talking about?
Well, look, I'll give you an idea. Like with little schools
Why are you guys laughing?
schools in session, right? Schools in session. So and I'm glad that Sam mentioned China, because they're the second largest economy in the world, and you don't really hear much from them, and they're not covered in mainstream media. But what's been happening with bond yields is US bond yields have been ripping up, and Chinese bond yields have been gapping down, like just absolutely on two different trajectories. What this means is that China is in a deflationary environment and the US is in an inflationary environment. So China's GDP has actually been contracting for the last few years. They haven't been able to maintain the same rate of production as they did in the 90s, 2000s, and 2010s. That's not me being doom and gloom or saying that it's the end of the economy. I'm just saying that we have to understand what's happening with the two largest economies on the planet and how this can affect our asset classes. So if you've got the number one economy on the planet experiencing an inflationary regime, and you've got number two experiencing a deflationary regime, where does that put you? Right? It's like there's like these massive forces tearing apart these economies. It's got nothing to do with their own governments. It's got everything to do with their central bank's policies, right? So this is why we've got to say, watch the central banks. And so as Chinese bond yields continue to crash and US bond yields continue to fly up, it means that US bond value is going down and Chinese bond value is going up. So that, bond yields are inversely correlated. What essentially all I'm trying to say is that if you've got an inflationary environment in the US, deflationary environment in China, you need to be in out of system assets. That's all that I'm trying to say. Like, I can give you the economic model, I can give you the economic case, but the problem that I have is that if I try to explain all of these concepts, I'm going to lose people, right? So the safest thing to do is not hold bonds, not hold traditional assets, because you're going to get torn apart by economic forces outside of your control. Be in out of system assets. That way you've got at least a fighting chance of eking out a return in this kind of environment.
Sammy, you were in Thailand recently.
Yes.
Tell us about their...
They increased GDP by 5%.
I did spend a bit of fiat while I was over there.
They've got a new item in the basket that they are using to measure CPI. Anyway, we won't talk about that. Sammy, do they understand gold and silver a lot more than we do here?
Absolutely, much more so. The gold shops in Thailand are everywhere. I mean, look, when I was in Bangkok, the number of gold shops and the size of them was just insane. Even when I went out to the countryside, they still had gold shops out in the countryside in tiny little towns, shops stocked full of gold. And why do they have this kind of stuff when it wouldn't make sense in Australia? The answer is because everybody in Thailand buys gold. You speak to the locals, the minute they get a bit of extra fiat currency in their pocket, bang, straight up to the gold shop. And they're smart for doing so. The price of gold in Thai baht has absolutely skyrocketed over the last couple of decades, just like everywhere else across the world. So these Thais who have got extra fiat, run to the gold shop and plunged it into their favorite precious metal that they can wear on their neck, fantastic. Much better than saving fiat currency in a bank account like a lot of Australians do. So yeah, they're a lot smarter about this stuff than we are. It's deeply ingrained in their culture. And going over there with a bit of spare fiat to visit their gold shops is great fun. So if anybody's going to Thailand, save up your dollars, go hit a gold shop or two. You will not regret it.
Something that I like that you posted recently on your Instagram, I'd like to talk about it, something that Sam touched upon. You've got 4 positions that you can do with your currency. I love that.
So I thought you were talking about something else.
No. For another time. But you got 4 positions. You can spend it, right?
Yep.
You can save it, you can invest it, or you can trade it.
Yes.
Right. And I love that because it's like just trying to move people away from this conditioning of, okay, you don't need to be a consumer and spend it. You don't need to be classically conditioned and try to save worthless fiat currency because you're just going to go behind in real terms. Like options 3 and 4, invested and traded is fantastic. So I'd love you if you could just elaborate on that a little bit more. Because,
and you're asking me the question.
Just inverse the role play.
I love it. Yeah. Well, I mean, this splits consumers and investors. On one side of the equation, you've got people that spend. Now, spending could be on things. I mean, it doesn't necessarily mean you're just spending it and killing it. So that doesn't just mean you're buying useless TVs.
Yes.
I mean, you might be spending it on stocks or shares, but that tends to lean into investment a little bit. I guess my point is and it's interesting what you're talking about, how the Thai people are conditioned to buy gold. We are not conditioned to buy gold here, which means that we are heavily in 1 and 2. Spend and save, spend and save.
Yep.
What are you saving your currency for? The word save is the wrong word. I often say this to people. Do you bring your children up or do you save your children? You should be nurturing your assets. You should be growing your assets. You don't save your children. You bring your children up. But with currencies, we save it, apparently. Let it die. What are you saving it for? And then positions 3 and 4, invest and trade. I see cryptocurrencies sort of as both. I still see them as a trading mechanism. I see them as an investment mechanism. You've taught us the investment side. Gold and silver, the physical side of gold and silver, forgetting about full allocations, I see as an investment.
Yep.
So I don't know, what do you guys see in that? So you can, what did I say? Spend it, save it, invest it, and trade it.
Yep, absolutely. I could not agree more. And I love how you've laid it out for people where, look, spending, consuming, like you say, you could be buying food, you could be buying your Mikey ticket to come to work, you could be buying all sorts of stuff that is productive for your life. But at the end of the day, that's money, it's gone, it's out of your pocket forever, it's done. The next level up is saving. And we live in a system that punishes savers, but saving is a good thing. Saving is what people should be doing. You should be saving for a rainy day. The problem is you should not be saving dollars. And that leads into positions 3 and 4, investing your money for the long term. And then step 4, because not every investor should be a trader, is shorter term trading with your funds. And that I'd say you're going up the level of knowledge. You need to have more and more knowledge in steps that you go up. But graduating people from step 1 into step 2, and graduating people particularly from step 2 into step 3, you're doing good work, mate. And that is where I see the real value in Beat the Reset. You're converting people from step 1. I spend my dollars because they're fundamentally worthless. I can understand that. Into I save my dollars into, more importantly, I convert my dollars into investments that will hold and grow their value over time. That's how you get ahead in life. That is how you get ahead in a fiat currency system. It's always been the case. And here you are just delivering the truth bombs to people.
I mean, 100%. Like, I see Bitcoin as a fantastic investment. I see Bitcoin as the ultimate, alongside gold, savings mechanism that can help save you, especially over any meaningful period of time. But I would be the first person to let you know that all other cryptocurrencies are trading assets and trading vehicles, right? I would never want to marry a position in the crypto market, because I wouldn't call cryptocurrencies outside of Bitcoin investments. I see them as great trading positions. You want to be able to get in and get out. I had one of our dear BTR family members reach out to me recently, a little bit stressed out that their altcoins went through a pullback in recent time. I'm like, that comes with the territory, guys. As I always say, volatility is
Your friend.
your friend. And so if you're not using volatility to your advantage, or if it scares you, just go to Sam. Just go to Sam. If you cannot stomach a 10, 20% pullback overnight or in a week, don't come to me. I'm the last person you want to be dealing with. Head over to Sammy. He's going to give you one of the safest investments on God's green earth. But if you want to be risk on, you want to be bullish, and you want to trade, I'm your guy. That's it.
That's so good that you said that, because you guys together have the investment and the trading side sorted.
Yes.
As you said, Sammy, not every investor can be a trader.
No.
No. So can you just explain that a bit more? So your comment, not every investor, can be a trader. I mean, is that an emotional thing? Is that what you're talking about?
Absolutely. Emotion, I think, is the biggest part of that, but it's an entire skill set, an entire knowledge base in being a trader that you don't necessarily need as an investor. A lot of people, they only want to be an investor, and they only should be an investor because it requires a lot less work, attention, knowledge. You buy, you hold, you set and forget. It's a lot easier than trading. It's a lot less stressful. You give yourself a lot less gray hair doing it, and you still get great outcomes from it. So I'm not bashing being an investor for even half a second, but being a trader, it requires knowledge of technical analysis, fundamental analysis. You have to keep your eyes on the markets, the news, economic calendars. You got to be across everything. You got to be constantly watching markets. You got to be looking for opportunities every day to hop in. You got to be looking at exit levels to get out of your trades. You got to be extremely calculated. And talking about emotional control, I think that's the most difficult part. You have to be stone cold with your emotions. You cannot let a single thing get to you in the market. So, is that for everyone? Absolutely not.
And I wouldn't encourage it either, because it's super stressful. It takes it takes away the beauty of investing, right? And it just perverses it, right? If you're an investor trying to become a trader, you're just going to have a horrible time, right? And I don't like receiving emails with people who, get spooked at like a 5-10% pullback, because that's par for the course when it comes to trading cryptocurrency. So I always
But isn't that healthy though? I mean, if you're seeing a pullback at 5% on an asset that is volatile, isn't that a good thing?
Yes, it is a good thing, but that's what I'm saying. Hello. That's why I'm saying it's not for everyone, right? If you can't handle the volatility, please just visit Sam. Visit Sam, drop your life savings. You won't have no issues with that. And that's why I always just say, just go visit Sammy. If you can't handle the volatility, visit Sam. But if you want to be stone cold. You want to be a killer. You want to trade. You want to outperform everything. I'm talking about you want to outperform bonds, stocks, savings rates, inflation rates. You want to outperform everything, you come to me. But if you can't handle that volatility, please don't waste my time. And I say that politely because I don't want you to be stressed out investing with me. I want you to just come in, have a great time. You can see portfolio swings down 50K, up 100K. That's par for the course. If you can't handle that, visit Sam. He'll look after your investments. And if you want to invest safely in crypto markets, just buy Bitcoin. But if you want to be risk on, come to me.
Sorry, go Sam.
I was going to say, like, building on what Bisher said there, absolutely. That's why when people ask us, how much of my portfolio should be crypto, how much should be metals? It comes down to your risk tolerance as an investor. Like Bisher's saying, if you're getting spooked by 5-10% drops, you need to be way less in crypto, way heavier in metals. And I'm not just saying that as your metals broker. That is how your risk tolerance is as an investor. But if you're like Bisher with big balls of steel hanging down there, then go a bit heavy on the crypto. But you have to go in eyes open, being ready for that drop.
Big risks of silver.
Oh, yeah.
Risks of silver. We'll change that. From now on, instead of saying big balls of steel, because it always brings attention to, my members, why do we say he's got big risks of silver?
Big risk of silver. Now, you know what? While you guys were talking, it suddenly occurred to me that those four things, spending, saving, investing, and trading, are exactly correlated to the four characters in business: amiable, analytical, expressive, and driver. Amiable will spend, analytical will save, expressive will invest, and driver will trade. So that's the real drive, bullishness in you. So if you're a bull, you can almost put animals against those, but that kind of amiable, analytical, expressive driver kind of mentality, I think it's just perfect.
Yeah.
It describes everything that we really are all about here.
Yeah.
You're sort of both. I mean, Bitcoin is more a little investment / trading.
Yeah.
You always feel like you're doing investment, and everything else that everybody's doing is spending and saving. Which will never get you wealthy at all, in my opinion. I don't know what you boys think about that.
100%. I mean, the reason why I say save in Bitcoin, save in gold is that you need to think about and price things in Bitcoin and gold over a long enough period of time, because everything else just gets cheaper over time. So rather than your life getting more and more expensive, life getting cheaper and cheaper and cheaper, and you being able to afford yourself and your family a better quality of life, it's a great feeling. But you need to have time in the investment to get that reward. Whereas if you're constantly chopping and changing and trying to trade in and out of your positions, you're not experiencing that upside, right? And that's why we prepared the Bitcoin Gold report to kind of give you an idea as to how the performance looks over 1 year, 2 years, 3 years, 4 years, and then 5 years. You get the most reward for buck for being able to hold it long term. So that's really what is important. When you come to these investments, particularly with Bitcoin and gold, you need to have a long-term investor mentality, which is instead of losing 8 to 10% of your currency's value year on year, you're actually increasing it by 20, 30, 40, 50% year on year. Your purchasing power, right? Some years are better than others, but in general, that's the outcome that we're achieving.
And I think we're watching that now. I mean, we're watching people really doing hard in fiat currencies, but all our assets are creating this kind of, I don't know, almost disconnect.
Yep. I had a phone call just before Christmas. I had a client of ours call me up. We were doing a trade so that he could pay a tax bill. I won't go into the details, but he said something to me that hit me really hard. He goes, "Sam, I kind of feel bad." And I go, "Oh, mate, why do you feel bad? What's going on?" He goes, "Well, everybody around me is doing it really tough. Cost of living crisis is hitting them hard. And for me personally, I'm doing better than I've ever done before in my life, financially speaking, of course, because he's in the right assets in a big way."
Yep.
And, I said to him, "Mate, don't feel too bad. Bisher's phone line's open to anybody. My phone line's open to anybody. I don't discriminate. Anybody's welcome through my doors. So don't feel too bad about it." But I completely understand is that I feel the same way. I'm doing better than I've ever done before. My investments are printing money like my name's Jerome Powell. Yet the average Australian is doing it tough out there. And, how do you get that to fit in your head? It's tough.
All right, gentlemen. Well, I think we're getting close to winding it up. Anything you'd like to say in closing, gentlemen?
Absolutely. Ladies and gentlemen, you're not bullish enough. If you got spooked by Bitcoin going from 66 to 108 and then back down to 92, guys, come on. This was a buying opportunity of a lifetime. I spent all of my trading hours, my waking hours between Christmas and New Year's accessible to everybody. And yeah, it just, the phone lines dried up. This was the opportunity. Bitcoin rallied from 66 to 108 in less than 6 weeks. Less than 6 weeks. That's astonishing, guys.
That's a big rally.
That's a massive
That's
move.
a big
And the
move.
first time it had any meaningful pullback, and you go to sleep on it. Like, guys, you're not bullish enough. You need to go out there. You need to buy this stuff. And I'm telling you, 2025 is the year of the raging golden bull run. What we saw in 2023 was a recovery following a pretty savage bear market. 2024 was the genesis of the bull run. We broke out after 6 months of chop at the onset of President Trump getting selected. And then we're now going to experience the golden bull run. So guys, get heavily allocated sooner rather than later, because there's going to be diminishing returns later on in the year.
Sammy, any great words for people?
Well, I don't want to steal your line there, mate, but guys, the answers are right in front of you. These assets have been proven over the last couple of years, in particular, that is, over the last decade or so, even more. Do what you know is right. The writing's on the wall. The fiat's dollar's on the way out. The US dollar, world reserve currency, it's losing its status. Get into inflation hedge assets. Do it now whilst they're still cheap, whilst the opportunity is still there. Get rid of your fiat currency. Do the right thing.
All right, well, that's it for us, the gentlemen. So, of course, we've got Samurai Silver from Liberty Bullion. We've got the Baron of Bitcoin from Stormrake. Gentlemen, that's it for us for another great session here at Brunetti on January the 7th, 2025.
Yes, sir. Yes, sir.
And, of course, as we always say, look after your health, look after your wealth. And as always, gentlemen,
Make good choices. There we go.